Welcome back. We've got lots to talk about in the forest products sector. Canfor has posted results. The company saw a loss of $8 million or 9 cents per share on the back of reduced production amid scheduled maintenance outages. Meanwhile, West Fraser timber shares are also down despite the company beating estimates earlier this week as investors continue to assess how a recession could affect the demand for lumber. Our next guest believes lumber prices could drop about 17% from their current level by the end of 2023. Joining us now is John Cooney. He's an equity research analyst at ERA Forest Products. John, thanks a great deal for joining us. Let's begin with West Fraser Timber. That stock soared, obviously, about a week ago on reports of takeover interest. The company did confirm it had talked to a pair of companies. It's not clear whether those talks are ongoing or not. I think West Fraser said they were not ongoing. Yesterday, in my understanding, the company's CEO would not comment on the takeover situation. You responded in detail with a detailed note on the day that takeover interest was reported. Where do you think this situation stands?
For now, I think it's on hold. I mean, you mentioned it on yesterday's call. The CEO, Ray Ferris, referred back to last week's press release. There were talks at some point, or the parties met, but talks were not ongoing. So for now, we'll wait and see. But clearly this company, one of the companies involved, Kronospan, has a big interest in, particularly it seems like the North American structural panel or OSB market. So it's a story we'll be keeping an eye on here in the coming months and quarters.
What's your view on West Fraser stock now, where it is now? It's trading at 120. It's lost a bit of altitude since that big run up, but it's still trading much, much higher than it was before the takeover report hit the screens.
Right. And, yesterday it was sort of a similar event. Q2 earnings were fabulous, but all eyes now are on the back half of the year and sort of the impacts of, a slowdown in the U.S. housing market, a potential recession, huge inflationary pressure. So while the company's doing kind of everything it can, given these circumstances, we still see sort of more downside risk than upside at the moment. Maybe when there's further clarity on the state of the housing market or what the Fed's next move will be it Q4 or Q1 of next year, maybe a more attractive reentry point. For now, things are looking, I think, a little bit toppish.
Okay, and why don't we move briefly to the Canfor numbers? I know you have not had time to get on a conference call, but what's your early takeaway from those Canfor numbers?
Yeah, much like West Fraser, good numbers for Q2, but again, all eyes will be on the back half of the year, particularly with Canfor. They've got much more European exposure. So, the energy crisis there, inflation's bad here. I think it's worse in a number of different European countries. So there'll be a lot of question marks about how that business will hold up in the back half of the year. The other big piece, I think, is Canfor's exposure to British Columbia, the highest cost producing region in North America. Canfor is the most exposed of the big three Canadian lumber producers to BC. So there'll be question marks about how the company can kind of overcome those challenges in the second half of the year and into 23.
Okay, why don't we talk about the commodity that is crucial to all of those, to both of those companies and the others in the sector, and that is North American traded lumber. Where do you see lumber prices going over the next year or so?
Yeah, it's an interesting juncture at the moment. You've got, expectations for decline in housing starts, which would normally imply weaker lumber prices. But as I referenced, you've got, incredibly high costs in British Columbia, which supplies about 15% of all U.S. lumber. So it's going to keep the pricing floor, we think, much higher than we've seen in previous cycles. I think prices are on the cusp of rolling over here and will fall back through Q3. But if they fall much below sort of, $600, $550, you'll see downtime in British Columbia. So I'm expecting maybe a series of mini cycles where prices drop lower, it's met with downtime, and we see a sort of a modest bounce again, but ultimately far above long-term kind of historical averages through the next 12 months here.
Why don't we finish with one of the key drivers of lumber pricing, and that is the pace of U.S. home starts, new home construction in the United States. I think a lot of people assume that with rising interest rates in the U.S., that new home construction may have fallen off the map, but that's not the case.
No, we've seen a pullback for sure in the last couple of months here, and I think the expectation for maybe further declines to come. But we're still running far above 5-year averages. Even looking at some of the rate moves in the last kind of 2 weeks here, some of those mortgage interest rates are checking a bit lower. there's still the whole consumer sentiment piece and, the recessionary headlines. It's not maybe the ideal time to go out and buy a home, but we're definitely not expecting a capitulation in starts here. Maybe we fall back to sort of a 1.5 million rate for the next year here and then start trending higher again.
John, thanks.